Hello and welcome to the day ahead. It is Thursday, October the 6th. I'm Andrew Gagan. Well, Wall Street's two-day rally has come to an end as treasury yields increase, the major indexes all reversing. This as economic data failed to reinforce hopes that the Fed might follow the RBA's course and pivot to a less hawkish policy stance. Rate-sensitive tech stocks were mixed, while the banks dropped after climbing more than 4% in the previous session. Among the sectors in the S&P 500, utilities and real estate suffered the most in the sell-off. However, the energy sector gained after OPEC Plus agreed to its deepest cuts to oil production since the beginning of the pandemic. And Twitter lost momentum in line with its peers, having surged 22% in the previous session after Elon Musk declared he would proceed with his $44 billion bid to take the social media company private. His own company, Tesla, slid more than 3%. Well, treasury yields have climbed again as the market bet that the latest US economic data will not alter the Fed's hawkish policy stance. The yield on the 10-year treasury was 14 basis points higher to 3.76%, and the 2-year rose to 4.14%. The ADP employment report showed private employment in the States rose by 208,000 in September, slightly above forecasts. And the ISM's non-manufacturing PMI dipped slightly last month, but was above estimates, while the employment gauge jumped up to 53 from 50.2 in the prior month. The US dollar rebounded on risk-off sentiment as that returned. The euro and sterling down more than 1%, with Britain's private sector last month suffering its sharpest contraction since last year's COVID lockdown. And the Aussie fell from highs of 65.2 to be around 65 US cents. And San Francisco Fed President Mary Daly has said the impact of the strong US dollar on other currencies and economies is a concern, while fellow Fed member Philip Jefferson reiterated inflation is the top target for policymakers and that growth will suffer in efforts to bring it down. Well, the rally on the Australian share market appears to be over, with ASX futures pointing to a lower opening this morning. Oil prices have reached 3-week highs as OPEC Plus agreed to its deepest cuts to production since the beginning of the pandemic. Prices were also supported on data that showed US crude and fuel inventories fell last week. Brent crude up 1.7%. And OPEC Plus will impose cuts of 2 million barrels a day as it attempts to arrest the decline in prices on signs of a global economic recession, rising interest rates and a stronger US dollar. Iron ore futures were little changed, while base metal prices were firmer, lead and nickel rising the most, but copper fell around 1%. And the crypto market has followed equities lower, although Bitcoin has managed to hold on above 20,000 US dollars. Locally today, we get international trade data, and China's financial markets are closed for Golden Week public holiday. And that is your day ahead. We'll see you again tomorrow.